Welcome to the All Financial Hour podcast with Steve All.
You know, Steve, I saw an article on Kiplinger.com with questions often asked by people who are about to retire. One, of course, was, if the market is down or flat, do I back off with my withdrawals? What are your thoughts on that?
My question is, it's all going to depend. How are you going to replace your paycheck in retirement? Because that's what I just got done talking about. You know, you don't want to sit on the couch. What's it going to cost to do the lifestyle that you have? So if you've got expenses of X and your income's lower, my expenses are up here and my income's down here, what's that gap? How am I going to fill that gap? There are different ways that you could fill that gap if that's your situation. One, what they're talking about here, the 4% rule. Just take 4% out of your portfolio. Over time, it should grow and you should be fine. Or we can build preferred stocks, a bond portfolio, pay out about 5%. That's the income that you can spend. Or a lot of people like to look at it and say, Steve, I don't have one of those pensions. How does that work? And I look at it and say, what if you could do a personally funded pension? We're going to get a deferred annuity. And we're going to allow that annuity to grow up for a year or two. And then when we turn on that income stream, that's going to be guaranteed for the rest of your life. If you're married and you choose that at the beginning of the process, it's for both you and your spouse's life. And people will ask me, well, Steve, what's the best way to do that? I say, I look at the point and say, which one takes the least amount of money to create? And if that works for you, and if you're looking for how do you replace your paycheck in retirement, that's a very important question to ask. And if that's where you're at right now and you're not sure how to do that, ask for the income plan. We're going to sit down and look at what are your expenses and how much guaranteed income do you currently have coming in, and how do we fill that gap so that you can do what you enjoy doing in your retirement years.
It's been said before that having a successful retirement means income, income, and income. If you'd like to come in today for this complimentary income plan, call right now, 636-230-8824. That's 636-230-8824. That website, of course, yourmoneymattersstl.com. Steve, for those that may be on the fence about calling today and getting on the calendar, being committed to it, what's that first appointment like?
Well, we talked about it just a minute ago. A lot of it's what your wishes, hopes, and dreams, and what does it look like for you. And then we're going to ask those questions. Do you have a pension? If so, how much? Social Security, what's the amount? Married, single. And then we're going to ask for the copies of the statements of your investment accounts. That way I can look at it and find out, where are you? How much of your money would be needed if you need income? If you don't, what are we going to do? Do I need to protect that asset so that you don't have to worry about big market declines? Or do we have to grow that asset to meet your expectations in the retirement years? But that's what we're going to do. I meet with them, answer a lot of questions, find out the wishes, hopes, and dreams. And then David, my paraplanner, will come into the room and he's going to gather the data so that we're ready for that second appointment to tell you, here are the ideas that we have as a plan for your retirement.
Very simple. Call today. That phone number, 636-230-8824. One more time, that website, yourmoneymattersstl.com. The Wall Street Journal says Gen Z is being called the Roth generation, and it's largely due to advice that they're getting where else, Steve, but social media.
Open a Roth IRA. Every dollar you put in grows tax-free forever.
I'm going to go through step by step how to invest your Roth IRA.
I took a look at my Roth IRA's contributions, and for the first time in my life, I'm glad to say that I maxed mine out. I'm going to show you exactly how I did it.
All right, so let me break this down for you. They say 75% of Gen Z investors who contributed to an IRA in the first quarter chose a Roth account. But they're not the only ones who are embracing the Roth strategies. Baby boomers are also jumping on the train at 41% doing this during the same time. So Gen Z is getting the headlines, but boomers are also making some big moves with a Roth as well. Why is this happening, Steve?
Well, the big question that I think that was fun about 10 or 15 years ago, we used to spend half hour at a presentation asking the questions, do you think taxes are going to be higher or lower in the future? Very few people believe that taxes are going to be lower in the future. Mm-hmm. And then when we get to the Gen Z, I'll just have to use my son, Matthew, when he first started to work. Gets out of college. He's got that first job, first availability to put money in a 401k. And I look at him and I say, Matt, put your 401k contributions into a Roth IRA account. And you got to remember, my son is a CPA also. So he's in the accounting world. We're going through, tax deferrals, time value of money, and we're going on a lesson. We probably went back and forth for probably maybe a half hour to 40 minutes on the advantages and disadvantages of money. And then finally, that old saying, he said, you kind of wrestling with a pig in the mud. After a while, you realize the pig is enjoying it. Well, you got two accountants arguing about taxes. And finally, I just stopped and I said, Matt, do you think taxes are going to be higher or lower in the future? He says, Dad, they have to be higher. Right. I said, then put it into the Roth. It'll grow tax-free for the rest of your life. Because if you don't, then we run into a problem with that. And then all of a sudden, the tax rates that you have now, especially when you're newly working, versus you get to your 60s and you're in your higher earnings years, okay, now those rates are even higher. So Matt decided that was the best thing to do, to go ahead and put his money into the Roth. So the younger generation, I do push that direction. Now, the baby boomers. Why are we looking at Roth conversions? Because, see, we were sold something back in the 70s when this thing first started. Hey, put your money into an IRA or a 401k account. You're going to get a tax deferral. It's going to grow up tax deferred. Mm-hmm. And when you take that growth out, you're going to be in a lower tax bracket in your retirement years. And I think that people looking at it today is most people are in the exact same tax bracket after their working years than they are during their working years. Why? Because they developed a lifestyle. And if that lifestyle takes X number of dollars, I don't care if it's $5,000 a month, $10,000 a month, it's going to take that exact same amount to meet your lifestyle in retirement. How are IRA and 401k distributions taxed? Ordinary income. So it's the exact same thing as when they deducted it from your paycheck. And then I ask a lot of them, it's always fun to sit at a presentation and go, how many people are actually in a lower tax bracket in retirement? And almost nobody raises their hand. And if they have those one or two that might raise their hand, then I ask the next question. Have you thought about when you have to take required minimum distributions? And have you thought about when you lose your loved one and those single rates kick in? And most people don't think about that. So Roth conversions is a very, very, very important thing within our practice. Why? Because I believe that reducing or eliminating taxes in retirement is the greatest thing you can do for a successful retirement. And the only way that I know if that's going to make sense for you is for you to come in and do a tax analysis. Now, I will look at for that tax analysis. If you have $500,000 or more in IRA or 401k assets, give us a call. Let us run that analysis. The reason why I use that number is the calculations and the math work better if you've got more than that in your accounts. So, if you got more than $500,000 in IRAs and 401ks, call, ask for the tax analysis, allow myself and my team to analyze your account to see if Roth conversions might make sense for you.
And again, we'll do this for our radio listeners only. That is 636-230-8824. That's for that complimentary tax analysis. You must have at least $500,000 saved there in IRAs and other accounts. 636-230-8824. The website, yourmoneymattersstl.com. So if you're considering retirement, but you're thinking, all right, I can do this one more year, I can hold out, I can make it work, consider this list below here. It's from Transamerica. Steve, I gave you a copy of it here. How do you know when your clients are just done? They've had enough.
Well, I think that's the neat thing when clients are in that category. I like to call it when's retirement day, TBD. And most people use to be determined. I look at it 2 bad days. I only need 2 bad days in the office because usually when the people come in, work's not fulfilling them anymore. They're just not getting out of it what they were. Or they got the unbearable boss. I get a lot of that today. Some of my clients that have been places at 35 to 40 years, the new kid comes in on the block and some 20-year-old's trying to tell them how to run the business that they've been working at for 40 years, and they just can't take it anymore. So they're at that place, and I'd say, you're right now, you can retire if you worked another 3 or 4 years. So let's run the numbers to find out what happens if you did it today. And then once they get that picture that if I had to quit working today, I could stay retired, that's that aha moment's about the best way to put it, that I'm going to be okay. I'm working because I want to, not because I have to. And I think that's that magic day when you know that's there. And the only way you can find that out is to come in and have us run a retirement analysis. So if you're asking yourself that question, when can I retire? Will I run out of money? Call. Ask for the comprehensive retirement plan to allow us the opportunity to find out, 1, can I quit today, or is there a day in the future that you would like to do that? We can do both. Give us a call now. Ask for that comprehensive retirement plan.
636-230-8824. That's for this complimentary comprehensive retirement plan. 636-230-8824. Wall Street investors have spent the last few years waiting for the next big market shoe to drop. But strategist Ryan Dietrich tells CNBC that history shows bull markets last actually longer than most people expect.
This is now the 8th longest bull market since World War II. Okay, what's that mean? Look at the previous 7. 6 of them lasted at least 5 years. The average length was 7 years. We're not saying it's going to go 7 years. This one's about 3.5 years old. But look at history. Bull markets just don't end. Usually it's something come the Fed or maybe a 100-year pandemic. We're not seeing those worries right now.
Interesting. Why is trying to predict the end of a bull market actually harmful to retirement investors? I mean, no one has a crystal ball, but I guess you could try.
I think the idea is the emotions. It's been going up for so long, it's got to correct. And he said it, 3.5 years. I look at it for myself. We haven't had a big, long downturn since about 2009. The financial collapse, yes, we've had a couple dips in there, but we've been going for about 16 years. So we do have that potential for market declines. And I think that's why you need a lot of different tools in your toolbox. I like Market Guard, the money management that we use. We have static portfolios that we adjust for drift. We also have tactical management where it's actually moving. This year, a lot of those portfolios have gotten a lot more conservative. Why? Got a few headwinds going out there, between what's going on in Iran, what's going on with the presidential election, a lot of questions. So if you're concerned about the market and you would like something more than just buy and hold or buy and hope, give us a call. Ask for a risk-reward analysis so that we can show you how, 1, you can protect your assets and how you might be able to shift the way you're investing your assets to meet today's market uncertainty.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.
This radio show is intended for information purposes only.